Hi everyone, good to have you in class today. This is A Plus Academic Resource Center where we take online tutorials for undergraduates and senior secondary students, okay? Alright, so today we're going to be looking at taxation. We're going to be looking at taxation, okay? And the topic of discussion today will be ascertainment of assessable profit. And under it, we're going to be looking at year of assessment, which is abbreviated YOA, year of assessment. Then number 2, we're going to be looking at basis period. What do we mean by basis period? We're going to be looking at all that, okay? Then under basis period, we're going to be looking at the normal basis period, also known as the preceding year basis, okay? Then we're still going to be looking at the abnormal basis period. Abnormal basis period. These are all we're going to be discussing under ascertainment of assessable profit under taxation. So fasten your seatbelt. Let's get to work. Lest I forget, don't forget that what we are doing here, this project is specifically for social science and management science students. Social science and management science students only. However, we have some courses that are incorporated, just like the general math and economics. Basically, I think some science students in secondary school offer economics. Offer economics. So if you have senior secondary students, if they are science students and they offer economics, fine, link them up. If you have children in SS1, SS2, SS3, this class is also for them. If you have undergraduates, you know your friends, your family who are undergraduates. Undergraduate here, I mean 100, 200, 300 or 400 level. You can also link them up. Don't also forget, I told us that we are going to be starting afresh. So I would encourage you, if you're watching our video for the first time, do not just start from what you're seeing or just start from here. There are other videos that have come before this one, okay? Once you head to our YouTube channel, you go to our playlist where we have taxation. You will see where we started from. It's good you start afresh, start from the beginning so that you have a full understanding of what taxation or any other course you're treating is all about. Do not start from the middle or just cherry pick courses or subjects and run along with it. No, start from the beginning. That is why we have ensured that we start from the beginning, from scratch, to build a full body of knowledge, for you to get a full understanding of what any subject or any course is all about. All right, thank you. Fasten your seatbelts. Let's get into the business of the day. So here we are. So taxation, ascertainment of assessable profit. Now, the government usually prepare its accounts from January to December, January 1st to the 31st December. Now, it's not mandatory for taxpayers or business owners to prepare their accounts from January 1st to 31st December. No. The government, in fact, they are at liberty to prepare their accounts from any period to any period. It can be from February 1st to January 31st. It can be from April 1st to May 31st. But it should not be more than or less than 12 months. Okay? So now when we say year of assessment, this is the year that the taxpayer's income is being assessed. Okay? This is the year the taxpayer's income is being assessed. While the basis period is the preceding year, the year before the current period. Okay? The year before the period the taxpayer's income is being assessed. Now, for example, this is what we mean. If we have 2006 as the year of assessment, then 2005 is the basis period. Hello? If we have 2006 as year of assessment, then 2005 is the basis period. Okay, let me make it more clearer. In order for us to have a better understanding of what year of assessment and basis period is all about. Now let's do this. Now we have year of assessment. Sorry, I have to change this. So we have year of assessment and basis period, okay? Now, if we are going to be assessed in 2005, our basis period will now be, let's say Chinedu enterprise prepares an account every March every year, end of March, 31st of March every year. So let's say 2005 is our year of assessment, and our basis period will now be 1st of April 2003 to 31st of March 2004. This is from 1st of April 2003 to 31st of March 2004 is 1 year, 12 months. Basis period is same thing as preceding year basis. Sorry, not year of assessment. Preceding year basis. Preceding year basis. PYB. Basis period is same thing as preceding year basis. The year before the year of assessment. So if we are going to be assessed in 2005, our basis period is 1st of April 2003 to 31st of March 2004. If we're going to be assessed in 2006, our PB will now be 1st of April 2004 to 31st of March 2005. If we're going to be assessed in 2007, our PB will now be 1st of April 2005 to 31st of March 2006, as the case may be, and so on and so forth. So this is the difference between year of assessment and basis period. Please, if you don't understand, if you have any question, go straight to the comment section and ask me, okay? All right. Now, basis period there are two basis periods. We have the normal basis period and the abnormal basis period. So we have the normal basis period, and the abnormal basis period. So we are going to look at them quickly. Now, for the normal, remember I told you we have two instances under the basis period. We have the normal basis period and the abnormal basis period. The normal basis period is same thing as the preceding year basis. I've mentioned that countless times, okay? Now, there are conditions that give rise to the use of the normal basis period. There are conditions, and I've outlined 3 of them here. Now, the first condition is that it must not be longer than 1 year. The normal basis period must not be longer than 1 year. These are conditions that give rise to the use of the basis period. Number 2, it must be the only accounting period that ended in the preceding year. You must not have more than one accounting period. For instance, you have from January to December. For instance, you have from February to January. Different accounting period. No. You should be consistent. If you're using from so period to so period, that period should be the only accounting period for you. And it must be the only accounting period that ended in the preceding year. You should not have more than one accounting period preceding the year. Okay? Now, thirdly, the accounting period must commence on the day immediately following the end of the last basis period, or on the day the taxpayer commenced business. Now, I need you to just do a rewind, okay? Go back to where I did those analysis of year of assessment and basis period. You will notice that when I ended the basis period, if I'm continuing the next basis period for that year of assessment, I immediately take the next day, okay? What I mean is this. If we have from 1st January to 31st December, that's 1 year, right? Now, after 31st December, what is the next period? Is it not 1st January? So that is what this third condition is trying to explain. That the day that the accounting period must commence on the day immediately following the end of the last basis period. Okay, so from January 1st to 31st December is a basis period. So before you continue the next basis period, it should take the immediate period, which is 1st January. I don't know if I'm making sense, if you're understanding me. Please use the comment section if you're not getting what I'm saying, so that I will throw more light. Okay, so that's that. These are the conditions. Then under abnormal basis period, sorry, I have to wipe this off. Under abnormal basis period, we have 3 scenarios that may give rise to the use of abnormal basis period. Number one is cessation of business. Cessation of business. Commencement of business. Then we'll have change of accounting dates. Change of accounting dates. Now, these three scenarios may give rise to the use of abnormal basis period. Abnormal basis period. Cessation of business, commencement of business, and change of accounting date. Okay. Now remember, when I was explaining the normal basis period. Again, note that the normal basis period can also be applicable actually to businesses that are 3 years old and above. Okay, 3 years old and above. Yeah, that's for normal business period. So I'm quickly mentioning that because of this commencement of business you see here, there are two different scenarios. So for abnormal business period, the commencement of business here is business that is just starting for the first time. While the use of the normal basis period for commencement of business is business that have stayed up to 3 years and above. Okay, so we are going to look at various examples in our next class, how we can apply the normal basis period and the normal basis period to solve some problems. Okay, all right, thank you very much. We're going to stop here. I don't want the class to be too long. If you have any question, use the comment section. Ask me anything you want to ask me. I'll be more than glad to answer you. Do not forget to subscribe. If you know that we're giving value, if you know that what we're doing here is of great importance, please like and share. Invite people to be part of what we're doing. Thank you very much for your time. Bye-bye.